comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hey everybody, thanks for tuning in to another episode of Final Settlement. We had an awesome podcast this week covering everything related to the Thailand banking crisis, BitChat, Nepal's usage, a lot of the adoption across global markets, the NASDAQ taking an investment in Gemini, as well as we have some big travel plans this week. We will be in Nashville, the team from Onramp, Early Riders, and some of our portfolio companies. We're going to be hosting events, private poker tournaments, as well as meeting with prospective clients and investors. If you're interested in meeting us, shoot us a note or hit us on Twitter, and we'd love to connect in person. Hope you enjoy the show.
All righty. Welcome back to another episode of Final Settlement. Today is Monday, September 15th, 9:38 a.m. Eastern Time Zone. Gentlemen, how are we doing? Liam, Michael, good weekend?
Price is ripping. We got,
is it? I haven't even looked.
I mean, well, it's I guess like relative ripping. We did a little touchdown to 107, and everyone was calling end of the bull market or whatever, and we went back up to like 116. Some top calls. Yeah, obviously gold ripped, and gold's that kind of leading indicator. But also we have a big week here in Nashville. We're gonna have folks from across Early Riders, Onramp, Acropolis, other portfolio companies. So it's gonna be a big week. Hopefully we'll see some listeners in person.
Yeah, big week. Let us know if you're going to be in Nashville and want to meet any of the team. Talk to us, chat with us. We will be there. But
we are going to have a very high signal allocators poker game. We still don't necessarily know the buy-in. It's more than likely going to be a tournament Thursday night. So I know a lot of you guys think you're never going to need on-ramp, self-custody to the max, and we'll eventually be a client. But until then, you probably want to reach out to, play poker with us. And maybe during the poker game, you might actually get multi-institution pilled and realize the multi-institution light. And so we'd love to have
it. Wouldn't be the first. It wouldn't be the first time, Michael, that someone's gotten MIC pilled during a poker game. So there's some precedent.
It's the same as Bitcoin pilled. Like as individuals start to understand, the value prop of Bitcoin, it's very hard to not, 8-bit in the very same way. Once somebody deeply understands multi-institution custody and the ramifications, not to have a tiny little bit of exposure is generally not the smartest thing.
Correct. Well, we've got a big list, not many deals, but a good amount of news and a list to get to. So we're going to start, Michael, I think you brought this one. But a banking crisis in Thailand. What's going on here?
Yeah, so I've been just checking our facts. A lot of things float around on Twitter, like Amazon hiring a crypto expert. I couldn't find anywhere near that or what it meant, and I saw them since 21, so it didn't include that. But I did. This is an independent source referencing. I don't even know the total number, but banking crisis explodes across Thailand. They're referencing or leveraging, citing that there was some kind of like nefarious activities with certain accounts, and that they just like kind of dragnet across the board, have halted, seized capital from moving. But you can imagine, that's a very easy out when it comes to capital flows and in referencing, any kind of Ponzi or just nefarious activity. I think this had been brought up either on Last Trade or Final Settlement a few months ago when the Iran attacks were happening, and they had leveraged that they got like cyber attacked and they had to like halt payments or halt capital. And it's like, well, isn't that a very convenient way to, reference why, your clients can't hold money? Where I think this matters from the business side or just, in general building is obviously for better products and services that can be centrally controlled is paramount. But I think the thing that matters even more than that is ultimately the whole outside money notion and theme. Because I think what's happened over the past couple of years is with the proliferation of ETFs, digital asset treasury companies that are publicly traded, among other vehicles, all of those products and services have one throat to choke ultimately. And so you effectively have an IOU. I don't think anybody debates that. And I think as we go to this world and we're in a bull market for kind of authoritarian overreach, censorship, everything that we see and we continue to see in the market, we'll talk about Nepal after this. Point being is you may want actually money that doesn't have a single counterparty, single point of failure. And this is a very easy case of that. Even when banks start, holding BTC in the US, we'll naturally start seeing, we're talking with them, leverage multi-institution custody. So I thought that was just like a really good kind of thing we need to not forget in the West, because we get lulled to sleep. And the reality is there's no bailouts in Bitcoin. So if your counterparty is insolvent, even their Bitcoin doesn't have to be missing, but if there are other fiat obligations, right? Like I think maybe that's a core thing that I know you guys will like to touch on is it's like the version of crypto, but accelerated. So all these companies are generally insolvent. I think it came out this past week, the amount of unrealized losses banks have on their books. Well, what happens if they have a hole there? There's a bank run, and now they have $50 billion in BTC. Whose BTC is that? And it may not be yours.
Yeah. I mean, what stood out to me of this is this last line here. As a result, honest people have been caught in a net meant for criminals. And I think to me, that's kind of the inevitable end state of all of this when you have dependencies for your money, for your net worth, for your livelihood. Even if you are not conducting criminal activity, the sort of, clamp down from an authoritarian regime, or even just a regime that perceives some, scam network proliferating, so they need to, shut down the internet or shut down access to accounts. You will not be spared for not being, quote unquote, a criminal. Like as these, all these forms of dependencies sort of metastasize, you will always have some basically way to be captured in a system like this. And so it speaks to more broadly just, forms of money and forms of wealth that can be preserved outside of systems like this without dependencies. And so that was the kind of the big takeaway for me is this last line there. It's like, even if you're doing everything right, like that doesn't mean that, your money in the bank's okay if something like this is to occur.
Yeah, they're always just going to manufacture emergencies or use emergency powers to justify actions like this in any scenario in which they aren't actually solvent and or do not want to give all clients their funds back at a single point in time.
Yep.
Yeah, there's actually one thing to call out here that I think gets missed is this is where maybe it'll pick up steam over time, but the whole notion of proof of reserves being a fallacy. And this is another example of that, because just because the bank or exchange shows you the assets, the underlying sit there, well, their obligation specifically at a bank or something like this doesn't necessarily mean they can have to let you withdraw or make you be made whole. And that's a very subtle, unique thing. I think it actually came out this last week for anybody that's not paying attention. Swan, I guess I shouldn't misspeak. I think Swan is either exposed or actually starting to be sued from previous users of Prime Trust that got caught holding the bag of the like 21 million plus that was left. Known secret in the space, a bunch of exchanges that leveraged Prime Trust had taken their clients' assets before off, and some were left on. Point being is, in bankruptcy court, we see this with Genesis, FTX, Prime Trust. You get left holding a bag, pennies on the dollar, or ultimately holding nothing for years, hoping to get your BTC or dollars out. With multi-institution, it's very unique, at least in its current iteration, because the individual client is not only the title owner, but the key agents are work on behalf of the individual client. So God forbid exchange goes down, it goes into receivership. It does not prevent any of the assets from being moved. They move in independence, not on the request of the others. And I think that's very subtle, but very important as we start going to a world where, again, you don't want to be exposed to somebody else's, whether it's technological failures or just asset management, risk management.
Yeah, and if you are going to be exposed, like distributing that exposure to multiple parties, potentially who are in different jurisdictions, is a massive benefit and advantage.
This also directly ties into as banks start to get into the space too, and they're sub-custodians, because that's essentially how Swan works. Prime Trust is their sub-custodian, where clients actually hold assets. It appears that clients of Swan that withdrew assets from the platform in the final few, I think, 90 days or so before Prime Trust was known to be insolvent, or they're trying to claw back those types of assets, which are going to be difficult, but we'll see how everything plays out. But for banks that sub-custody Bitcoin to other large places too, even if you take the Bitcoin yourself off of these types of platforms, it doesn't mean that you're going to be not liable at all, or at least dragged into this lawsuit with other sub-custodians too.
Yeah. Somewhat related story that we alluded to earlier. What's going on in Nepal? I mean, this is a wild story. I think it first crossed my radar because there was a headline around BitChat, Jack Dorsey's Bluetooth messaging app. There was basically a spike in downloads there as the prior government, the now former government in Nepal, had basically tried to curb social media usage, and then the internet itself, and so people were turning to freedom tools, open source tools such as BitChat to communicate and coordinate. They were also using Discord, and they ended up this was multiple days of unrest and riots and burning down of parliament buildings and people in the government. And they ultimately, the sort of Gen Z protesters, the youth of the country, overthrew the government and picked a new prime minister via a Discord vote, which is just like such a microcosm of the world we live in today, and where we're headed in terms of just the usage of the internet and sort of youth collaboration via these tools and these networks. And it's just a pretty remarkable story of if you think about the sort of the long history of these types of regimes, they're the reason that they persist and continue to occur is because it's often difficult for the whoever is being oppressed to actually revolt and do anything about it. And I think what we're beginning to see is intelligent leveraging of these tools in order to collaborate and coordinate in a way that previously just wasn't possible. And so it now shifts the balance of power a little bit towards the individual, towards the populace, if they are able to coordinate in these ways. As we know, you can coordinate with outside money like Bitcoin, but increasingly tools like BitChat, Nostr will enable people to communicate, message each other, and coordinate in these types of ways. So any thoughts on this?
Yeah, Brian loves taking the links I pull up and then just going off and all. It's great.
To be fair, I shared this with you last week before you shared it with me.
You shared it on a podcast. I obviously saw it as well, but anyway, it was a great recap. I think the main reason I pulled this up was there's a few angles. One is Jack Dorsey being behind BitChat is very interesting because call it 10 plus years ago, there was the Arab Spring in Cyprus, and Twitter was heavily used there. And you kind of fast forward close to 10 to 15 years, and you see his new tool being implemented across the world again to overthrow effectively manage governance. The Discord thing was also interesting from social media. I think where this becomes fascinating is really we already see the kind of writing on the wall when it comes to TikTok the past few years, the internet, what China's done. You can feel the grapple of censorship, authoritarian overreach, communication, free speech. Europe is very heavily here going that way. And to Brian's point, these tools will naturally start to proliferate. Where I think makes it really unique is the ability to, and this ties back to crypto versus Bitcoin, that you're going to naturally need some kind of unit of account that's globally recognized that everybody wants to make it all work together. I don't necessarily know exactly how, other than it's going to be the incentive model for the upload and download, like with Nostr and relays versus applications. This kind of like, I stumbled or had this thought like years ago with this notion of how a torrenting system is completely different in a Bitcoin world, because ultimately in a traditional fiat world where you have a throat to choke like Visa, MasterCard, or even banks, you can't really transmute value. So there's always kind of there's a market that will be checked off, especially if you just go to the worst example of anything that is would be censored, any kind of document, any kind of video. In torrenting, if you were going to be the seeder, you're naturally exposing the article. But if it was banned, you're going to be very hesitant to do it. Point being is a market would naturally be created, especially if you're trying to pay over Visa or whatever. Like Stripe will cut you off if they saw you getting traction. But with BTC, there's always a market to be formed on a bid ask on anything on the planet Earth, because somebody will always be interested. It's like mining. Somebody's always going to be interested in taking and integrating or putting that transaction in block. So where that comes back to all this is like all these different primitives that couldn't exist, or once they got to a certain scale would have been choked off because of you need natural flow of capital for a number of reasons. Where that's the last piece with this. And my understanding, BitChat has like a implementation of eCash among maybe Lightning. I think it's going to be fascinating to see like encryption, open source tools, and then also the incentive model to like put a unit of account that everyone globally is going to naturally want together. And that's when shit gets kind of crazy with some of these tools. I also think the other thing that we should keep in mind is there's going to be some crazy crackdown coming down between what's happening there. People, this doesn't happen in a vacuum. It was like rumored that the guy with the Charlie Kirk deal like went on Discord and literally said everything he did. So he like the guy like got, we won't go deep there, but like got out of there and went on Discord and explained like word for word what he did, which was like a little suspect. The point being is like these tools are going to naturally start to get really demonized and vilified. And I think that's kind of a positive, because most people have been asleep at the wheel on all this stuff. And it's like the banking stuff, like people, when the best way to build something is when you need it. And I think more and more people are going to be needing them.
Yeah, no, it's a really good point, and why this is like such an interesting case study, because you have effectively like both forms of tools being used here on sort of like the centralized could be throttled side of Discord, and then something like BitChat emerging, which is more permissionless, more difficult to throttle. And you saw this example where both of these things were being used, but to your point, Michael, like it's probably to be expected that the more centralized avenues for this type of stuff will be throttled. And so to your point, like that could be looked at as a positive in the sense that it will catalyze future adoption of things like BitChat, of Nostr, of Bitcoin in general, because people naturally will have to migrate towards more permissionless, open source tools that can't be as easily throttled, basically.
And the whole impetus for this entire shutdown of social media was because they were essentially filming the sons and daughters of the top prime ministers and rulers of the Nepal government, who were living these incredibly lavish lifestyles and just showing the stark corruption between the millennials and Gen Z type people who feel like they couldn't get ahead because there were those people who were running the show that essentially were trying to implement a communist party, but living incredibly lavishly while nobody else felt they could get ahead. And I don't know exactly what Nepal's monetary policy is, but if I had to guess, I would guess that they've probably had some pretty stark inflation, just like pretty much everywhere else in the world over the past 50 or so years, and leaving many of the poor out of the financial system and feeling like they don't need it. And yeah, to both of your points, I think that younger generations at a whole, pretty much all across the world, are just feeling the impacts of inflation and crackdowns on monetary policy, and are really feeling the impetus more so than they've ever felt in order to necessarily build better tools, which is a really exciting time.
Agreed. Anything else on that, Michael? Or you want to shift gears?
Let's do it.
All right. So, Liam, you brought this one from Harvard Business Review. Does Bitcoin belong in your balance sheet? An interesting article, given what we talked about a week or two ago around Harvard endowment making a allocation to both Bitcoin and gold in their endowment portfolio. But what was the main takeaways in here, Liam?
This was an incredibly well-written article, and they essentially had almost every single point that I would write. It was probably better written than I could do, and they went through all the adoption principles from start to finish. But the takeaway was a little bit nonsensical to me, that it's only 1% to 3% of your treasury portfolio, and I think that's essentially just because that's what's politically palatable of being able to identify, cover your ass, essentially, if Bitcoin is as volatile as it has been in the past. But they did a really fantastic job of understanding the entire Bitcoin thesis, showing why it's a better gold, the full downside risks, etc. But the takeaway was only 1% to 3%. But essentially, we're at a point where it's become almost mainstream to have Bitcoin as part of your financial portfolio, both as a corporate and individual at this point. And it's just another great data point to see.
Well, you know who wrote this, right? It's
Christian Cataly. Who is that?
It's the co-founder of Spark.
Oh, I did not know that.
Yeah, I was gonna caveat that in the beginning. It doesn't really change any of it outside of Spark has a shit ton of money, and HBR is probably up for grabs. So this is probably like paid sponsorship, maybe not. It doesn't take away that it's probably well written, or it is well written, to Liam's point, because those guys are smart over there. They were former, Christian was with David at Meta or Facebook at the time for Libra. He actually had a really good thread breaking down a lot of the whatever it's called, tempo stuff. But anyway, I think the core point still stands. Harvard, no name, breaking it down to the zeitgeist, to your point, political, palatable. But I felt it'd be good to know that there's an actual Bitcoin person that wrote this. It wasn't Harvard or anybody like it.
Yeah, no, that's often the case with these types of things. There was a report last week that was more of like a formal academic white paper that was talking about sanctions risk and the sort of place for Bitcoin in a portfolio to hedge against seizure risk. And it was written by a guy who I believe went to Harvard. And so it was being sort of portrayed as Harvard economist says XYZ about Bitcoin. But that guy, similar to this scenario, is someone who's been around Bitcoin for many years. And so it wasn't all too surprising to see takes from that individual. But yeah, just something to be wary of when you see stuff like this.
Yeah, the other thing that's worth, I know we have limited time, so we can go on, but they're just worth calling out is he may actually be 2 to 3%. That's the careful part about everyone shilling anything in the space, including us, is kind of take it with a grain of salt and then understand what is incentivizing the discourse. And it doesn't make it wrong or right. It just makes it, biased and people naturally talk their book, and then ultimately discern if it's the right thing for you. And the reason why I bring this up is because, MIT, I think, he's definitely an Ivy League guy, was at Libra, believed in what, Libra was doing with the basket of currencies. Point being is you may look at Bitcoin as software for movement of data and money. And maybe it's there's somehow the gold will be, the reserve currency or treasuries. I don't necessarily wouldn't put it past that. I know it sounds crazy, but the connection from movement of capital in a more seamless way versus storing all the world's value. It's not just intuitive for everyone that those two things can be simultaneous.
Yeah, no, that's a good point. Pivot to let's talk a little Gemini. Liam, I think you brought these links, but Gemini going public. Winklevoss founded crypto exchange. Nasdaq made an investment of $50 million. And I believe Gemini popped a bit on its debut. I'm not sure where it is today, but Liam, what are your thoughts here?
Yeah, I mean, just shows one, all public companies are at least virtue signaling that they're doing something in the digital asset space just because it's the hot industry, just like with AI. Interesting that NASDAQ invested $50 million into them. And there are some synergies in terms of other of their clients just wanting to sub custody with Gemini's custodial services. And then just another interesting data point, despite their losses financially that we've discussed a few weeks ago at Gemini. I think that they upped their IPO price and then had ended the day up 15%. So it's just another positive data point that the industry as a whole, like there is significant institutional demand for it, and everybody across the space is looking to at least get into it a little bit. Many people will make mistakes early on, but right now the space is being looked at fairly closely, I would say.
Yeah, it's a good point. I would say we're a little early in the virtue signaling aspect. I think we're still tempered in the sense of like nobody, what was the back in 17 where they were putting like the iced tea?
Yeah, blockchain iced tea.
Yeah, but to your, so I think, and I mainly say that because of where, to share where we're at in the cycle, and also $50 million is pretty material. I think it goes to, you know, your point of sub custody, and then also in general, something I'll touch on before wrapping on this point is just trading and around trading on quote unquote blockchain. Sounds funny. I think, you know, the broader theme is the merging of digital assets and TradFi. We saw the Franklin Templeton and Binance news. We've seen this. There's a lot of others. And I think to your point, the balance sheet and their revenue is kind of like immaterial, because when you think about like Franklin Templeton as example, 1.6 trillion, like they need a viewpoint, they need to express in a certain way, and they need a team, and they need it fast, right? Because it's all just like flipped on a dime. And so NASDAQ is another example. They're also in New York, and Gemini being New York, they probably have had relationships for a while. Point being is the revenue is immaterial. And I always joke because there's a lot of companies, like you can fall forward in this industry by just staying alive, right? You know, you need the team, you need kind of like the tribal knowledge, you need wallet architecture. The one that I'll say is not necessarily, will be interesting to see play out, is a lot of the collaborative custody providers. And the reason why is because it's always been a common theme that, oh, like, well, a bank will buy them or a TradFi firm will buy them. But I don't think, unless they're just completely unsophisticated when going through due diligence, like, well, what am I buying here? And then you have to realize, well, I'm inheriting, 5,000, 10,000, 3,000, whatever the number of clients that are holding these plastic devices that are spread all over wherever. They have to figure out, how do you manage it? Because you have client services, there's high operational OPEX and CAPEX. And then it almost could be a liability if it's in the right way, if you have billions of dollars for a client and the assets are lost. And so there's going to be certain business models, like I think that financial institutions will shy very far away from, but then there's going to be a lot of others, to Liam's point, that may not necessarily have the revenue that you would expect in an acquisition, but it's not really going to matter when you're a multi-trillion-dollar asset manager needing to get into the space.
Yeah, the learnings alone are going to pay for itself, no matter what the actual financials of this firm are, assuming that NASDAQ does want to get deeper into the industry, and they're going to try all their crazy things with tokenizing stocks, etc., especially just based on what Sachs and everybody else who is high up in the administration is saying at this point. So yeah, it's more so about just trying to get in early and learn more than anything else.
Brian, do you have anything here? Because I do have something kind of spicy to share.
No, you can go for it. The only thing I was going to say is this is one way that the TradFi incumbents are getting involved. And then the other headline that we have was capital groups bet on Bitcoin treasuries, which is another avenue of getting involved in the space. But go ahead.
Hi, everyone. I hope you're enjoying the podcast. Wanted to do a quick shout out for Onramp in one of the core new products we released, Guarding Core. Ultimately, clients love that Onramp has distributed custody across multiple institutions, access to best-in-class financial services. They don't have to worry about, going deep into, their secret cave or wherever they're holding, their hardware device or seed phrase if they want to sell a little Bitcoin, take a loan against it. But on top of that, clients have increasingly been asking for additional permissions. And so not only do we have deepfake protection using liveliness checks to make sure that the individual is, an actual human, withdrawal delays to create real buffers and controls, something that really exists in the traditional financial system but doesn't exist in Bitcoin, ultimately, which leads to bad actors believing they can attack individuals for their Bitcoin. Different types of freezes, obviously the Lloyd's of London insurance, and then also additional permissions for our private clients. If you want to learn more about that, you can find it on our website, or you can reach out and book a consultation. Lastly, we will be in Nashville this week hosting multiple meetings and events. If you'd like to reach out, meet the team, please shoot us a note. All right. Hope you have a good rest of the show, good week. And we have a big guest this Thursday, along with some big announcements. So we look forward to hearing from you at some point. Yeah. So, so we were talking about Gemini and stock, like, tokenizing stocks and blockchains for stocks. And I think if you take a step back, there's a whole, I forget the term, but it has to do with a register that has been the fragmentation in private markets when it comes to, and there's a lot of people that have been working on this for a very long time. Seed Invest and Circle, that was their acquisition. It was basically trading around private equities in the issuers. And I do think that there's going to be some interesting fundamental value. Not necessarily you need a blockchain, but a standardization that can be created, because it can allow, I think that's one of the markets that have been a little bit not only fragmented, but just kind of, haven't been lubricated, for lack of better words, in the right way to get flow. But what hit me today, because there was another thing on the list, and we'll knock it out as part of this, is it was Solana and or Galaxy issuing their Class A common stock on the Solana blockchain. And I just stumbled into hearing Alex Thorne talk about why they picked Solana versus Ethereum and these others. And he was referencing about the validators. And I guess it just broke down about, if you have to issue on a different layer, outside of the L1, again, I'm going a little bit out of my depth, but it's just a point of how do you actually roll up? And then you have these different validators, and you can't feel confident that it would do that. And then from a securities perspective, it would cause a big problem. And that's where Solana was able to make it work. Why I'm bringing this up was I did think it was interesting if this is the world where it goes from trading, and really the one that at some point it's going to exist. I don't even know if we'd invest in it, because it could be 10 years, but imagine how fascinating it would be for you, me, anybody to invest in a company, and it generates its cash flows in BTC, and it programmatically on a monthly, daily, whatever dividend basis gets passed back to the individual. That's kind of very interesting, and you could see it going that direction over long enough time horizon. And I think a lot of these, I don't even know how the validators would ultimately work, but whether it's side chains or Lightning, that if any of this stuff has validity, it'll ultimately go to the most liquid and kind of viable technology. And yeah, I guess the last part of why I was, or maybe I'll pause there. Is there any comments that I just thought of that? I was very interesting, because at the notion of the crypto stuff is always fascinating to me, because there's so many intellectual people working on it. And it's they got halfway to the problem and they didn't realize these things are inefficient and they won't actually scale to get any real deal, but they have good ideas that will ultimately be ported over to Bitcoin.
Yeah. I mean, I thought it was interesting. I listened to Thorne's clip where he was articulating why they chose Solana. I did think it was interesting because it sort of, to a certain extent, confirmed a lot of my current assumptions around why people will choose not to build on Ethereum, because of the sort of embedded tech debt and complexity that exists there in terms of all the L2s that they've sort of pushed activity towards. And I think part of what you were trying to describe there in terms of why they picked Solana is that there's just less dependencies if you are issuing, a real world asset on actually a layer one. And so because the layer one of Ethereum is generally fairly slow and expensive relative to a Solana, the thinking was that, okay, you would do it on the L2s like a Base or an Arbitrum or something like that. But then that creates complications in terms of if something were to go wrong, then basically where's the source of truth has to come back to the L1, and that just creates some various complications. And so I think that is part of why they chose Solana. But to me, it's just confirmatory of people don't really care about decentralization when it comes to this stuff. People don't care about the fact that Solana has been down multiple times over the past several years. And has to be the chain has to be restarted basically by a foundation or a team. And so I think it's very just confirmatory to me of these things are just going to be built on the cheapest, fastest centralized thing. And no one's going to care about, marginal decentralization benefits on an Ethereum L2 or something like that.
Yeah. And to your point, I think that's all right. But taking a step back, there is significant, they do work on very interesting things in the broader crypto space, including just building out new technologies. But I always think that they get distracted by trying to attach a token to it, and then they get more distracted about bringing the token revenue or distributing it to different channels and trying to pump the token in order to bring more employees there. And then the token grows too fast and then it dumps hard. And then all the people leave and go and work on a different project. And many people haven't really been interested in the broader crypto space and working on Bitcoin because the transaction volume hasn't been there yet. But it's starting to be so large that people are going to come back to it, hopefully, in my view. And I do think that working on a project like that of distributing dividends via Bitcoin and taking a small fee is significantly more interesting than many of the other projects that the space is working on.
Yeah, and I think if anybody's curious, because I would be or maybe not, you find it intellectually interesting. We talk about this stuff because I don't really know how many, I don't even know if we're a Bitcoin podcast, but how many people would talk about it is. What I found is if you're going to play at the highest levels and you're going to want to work with these individuals and show them how Bitcoin can be the thing, you have to actually understand what trade-offs they're making and why they're making them and articulate to them. And then they kind of can sit back if they're clear-headed, pragmatic, and self-aware and say, oh, that makes sense. Or they can look back in retrospect. And I think it doesn't really even matter if it's on today, if it would be on, however it'd be managed on Lightning or Solana or whatever, because the main idea is nobody's using any of this stuff. It's all gimmicks. It's very interesting because it's been rumored Galaxy's buying a bunch of Solana. They just issued the thing. It's a very reflexive kind of old fiat way to do it. But the main point is as if the direction it goes, I'm not even convinced it does because there's still an underlying custodian of the title of the equity or whatever that ultimately is the owner where it sits. And you still have to manage the underlying to where that ultimately lies, the transfer. But the point being is that if it does, it'll naturally be the most efficient distributed protocol that will win, which will be Bitcoin and then Lightning as we're seeing built out because there's just so many other use cases and people are using that as money. And where this kind of maybe ties in to wrap up the crypto stuff is the Hyperliquid. I thought it would be interesting just to share. So Native Markets. I don't even know who Native Markets is. I guess it's a new team. They're the guy was using Hyperliquid before, but there's two fascinating things that I thought stood out. So we talked about before Hyperliquid, top 10 volume. I think number one, quote unquote decentralizing top 10 volume globally in exchanges. They issued this kind of public RFP. And the two fascinating things, one is all the way up to PayPal and Venmo. We're basically boot kissing, bootlicking, trying to get the dollar issued there. And the core idea for anybody that's not familiar with this is Hyperliquid, decentralized exchange. They have $5.6 billion of USDC sitting on there that they're not monetizing. USDC is monetizing, and they wanted to get request for if they were going to issue it on the Hyperliquid or a native Hyperliquid token, and then what would be the incentives or the economics that would get kicked back to Hyperliquid and the people that hold the token. Point being is, the crypto or fiat side was it turns out that it was a marketing stunt or directionally marketing stunt that Native was the people to win it the whole time when they went to go talk to all these node validators or whatever. They were all getting pitched by all these firms and they weren't taking the pitches because it was already going to Native. So it's just proves, the centralization theater and all of that. The thing that I thought was the most fascinating with this is that this is going to happen to all stablecoins because all the blockchains, even if they don't have to do it, they can basically go back to the stablecoin issuer and say, look, we're going to do this unless you share more of your revenue with us. And it ultimately means there's a commoditization of stablecoins, and not only commoditization, but like a margin compression that will ultimately happen. So that's one. The other one was realizing, well, that'll also happen when you start to see interest rates lower. And think about like already the level of kind of craziness we're seeing and just like this lack of signal and focus in this industry, specifically crypto, but also DApps. Well, what happens when interest rates go lower and the amount of, printing of like these tokens, USDC or whatever, but also people going further on the risk curve? Like, this is how we're going to blow everything up, is because there's going to be so much capital just flowing around on chain in this next cycle that it's going to get crazy.
Not much to add there. Liam, do you have any thoughts on Hyperliquid?
That was a crypto recap for the week. Anybody listening? If you don't like it, comment, and we'll never talk about Hyperliquid or stablecoins ever again. Hey guys, I hope you're enjoying the podcast. We've been going a little bit deeper into the digital asset markets, and I think it's important because of how it's going to ultimately relate to value accrual around Bitcoin. Quick word from Onramp. I'm sure everyone's familiar. Onramp provides multi-institution custody and financial services. Ultimately, our goal is to provide peace of mind for investors. We've had no shortage of inbound from different investor types, from individuals all the way to institutions. The one I want to call out today is individuals. It very often comes up, the difference between self-custody, collaborative custody, third-party exchange. And there's no shortage of different angles we can take in explaining multi-institution custody, the level of permissions, video verifications, multiple institutions holding keys. And there is no shortage of feature set, but I think one of the core things that comes up often why clients end up choosing Onramp is because of the peace of mind we provide them. A lot of clients just are getting increasingly uncomfortable with single counterparty risk, whether it's themselves and how they figured out their distributed custody. And ultimately, as the price goes up, being attack vectors for bad actors, as well as potentially, creating problems around inheritance. And so just wanted to call that out because I think that's a common trend we're seeing. Clients come to us really so they can sleep good at night, knowing that their assets are taken care of. They have access to best-in-class financial services like trade, Bitcoin-backed loans, dynasty trust planning if they'd like, as well as the ability to really safeguard those assets for multiple generations. So if you'd like to learn more, I'd encourage you to book a consultation or sign up, and our self-onboarding flow is very unique and quick. Hope you enjoy the rest of the show.
No, I think that was well said.
All right, Liam, you brought this. I admittedly have not read this, but I'm familiar with what Vercel is. But what are they talking about here? Open protocol payments.
So, Vercel, essentially AI, they do a bunch of different things, but a lot of AI cloud, and they offer APIs and they're essentially trying to create a agentic native protocol and have partnered with Coinbase for X402. X402, formerly held for HTTP as the internet native money, but that never really necessarily happened. But they've essentially created an SDK for anybody to offer agents the ability to pull from APIs, to offer certain like small micropayments, pay per service, and will allow for microtransactions using agents essentially to pull from all of their products and services that they offer. They partnered with Coinbase, and so essentially they're going to use based on USDC, I would assume, for most of these, especially for micropayments as is, but it's interoperable with any protocol, and so anybody can use Bitcoin on Lightning or whatever else. I would assume that people, we live in a dollar world, so it's I'm not going to say essentially that in the world today everybody's going to adopt Bitcoin all of a sudden, but it's really interesting to see the CEO came out and said this was essentially what I thought Bitcoin was going to be back in 2013, and obviously takes 10 minutes or so for on-chain transactions to settle. So it doesn't necessarily make sense for small micropayments in every scenario on the layer one. But eventually everything is, this is really interesting to see, and essentially how a lot of new transactions are going to work. It's interesting that they're not a Bitcoin or crypto native company coming out to do this. And it's great to see, but eventually I think all of this will naturally be done with a Bitcoin or eCash type of token rather than USDC on Base that's naturally centralized. But yeah, I was curious if you guys had any thoughts there.
No, it's super interesting. But so at any point did they reference, Bitcoin or Lightning or other blockchains, or is this really primarily being built to work with Base?
It's interoperable with any coin, token, etc., to my understanding.
Interesting.
Yeah,
so basically like agentic APIs that allow you to touch blockchains efficiently and quickly. Like, is that kind of the idea?
Yeah, it's essentially used for model context protocol for anybody to use their APIs, request pay-per-clicks, everything like that. But it can be for AI or agentic agents to use in the future.
Yeah, this is probably an oversimplified version, and I hope I don't kill myself in what I'm about to say. Is it's basically like if you think about a paywall, or you remember there was a lot very heavily on paywalls online, and you could pay. Obviously, you could pay with a credit card, and then they started to put sats, and you could pull it up, and you could pay. And imagine the paywall popping up, and it has 4 different ways to play, and you could pay with USDC, or you could play that API, and what it hits can be varied. But this, I mean, I don't know if you guys, I know Brian, you probably saw it, but it reminds me very similar, and it's probably inspired with what came out by Lightning Labs, I think maybe 6 months ago, which was the L402, using Lightning over HTTP. And I think this is probably one is I think orders of magnitude larger, Amjad and Replit, and I think they already kind of do stuff like this, and they're probably all in Silicon Valley and San Francisco talking and seeing this version, and to the point we talked about earlier, it all aggregate and people want to barter, so Bitcoin will naturally be that layer. But what I think the most fascinating from all this is the notion of Bitcoin becoming ubiquitous in society was never going to be one or the other. It was going to be both when it comes to price goes up. And then also as price goes up in parallel to it, the utilization on the internet, but not from a novelty perspective out of pure, to the point of microtransactions. If you're able to load up a wallet and you're going to be hitting these agents to build out whatever you need from a coding perspective, and those microtransactions are running, well, if that's your first experience and then you see the number go up because it's going to naturally have a BTC or Sats price with USDC or USD, you're wondering what that is. And then similarly, you're just kind of it'll just grow with society and the culture. And then you can almost take a step back and squint how it's it's just the thing. People just use Bitcoin. That's not a taboo or just a weird novelty. It's just the thing that you use when you're natively online. And it's very cool to see because generally I think we're all very bullish or positive, but it's very hard to see how am I going to use it? How are my parents going to get comfortable with this? It's very similar on the banking side where it's you can actually have a savings account. The savings account goes up over time. You can have a module underneath your checking account. The savings account will be there. And it's if you, decide to deposit your savings account over X time frame, you can see how much it'll just be the price of Bitcoin moving, but it's in dollar terms. And it's just you move it there. And people are well, I kind of want a little bit of savings in my account, and you'll just park it there. And then it just becomes ubiquitous.
Yeah, people will realize, damn, this guy used Bitcoin instead of USDC or USAT now, and he created the same exact model as me for half the cost. And so maybe I should start to use this asset that actually goes up in time rather than just continues to depreciate. And it'll just be another touch point for people to get into the industry. But this is obviously sorry.
No, sorry. I didn't mean to cut you up, but it was based on that point. It's this stuff is the most fiat, when you think about building on USDC, on Coinbase, on Ethereum, all you have to do is just build on Bitcoin. Spark's making, and there's more companies creating these open source tools. It's interoperable. You net settle in the best form of money. It goes up over time. It's not rocket science where this all ends up. And it's kind of a beautiful thing because everyone else is talking about all this other stuff. And again, that's where there's a truth in every lie. It's well, they kind of get it. We're inefficient in moving capital. What they just don't get is they miss the main part of oh, it's just Bitcoin. It's just the money. But when they wake up and it's like, why am I doing all this? And whether it's like USDC, oh yeah, I forgot we didn't even add this.
Yeah, this is where I was going to go. Is you don't want to use Fedcoin, Michael? Tether unveils USAT, its planned U.S. regulated stablecoin. I'm assuming this is going to run on their stable chain, but TBD on that. But yeah, any thoughts as it relates to this new stablecoin?
Man, I don't even know. I guess the biggest one maybe is it'll be interesting to see who competes, and it will come. I just don't know where, and I don't think it's from USDC, but where the competition comes from global flows. Because I think to the point we were talking about earlier, and that was kind of part of the reason is the stablecoin markets will really matter. We talked about it from like US, reach and control. And Tether has such, liquidity moat, and that allows them, and it kind of is like, even as interest rates will lower, naturally their revenue will lower, but they'll still be outpacing everyone else. So they can undercut a lot of people to maintain that market share. So maybe there won't be as much competition because this is effectively like the deeming of the US government.
Right. That's what I was going to say. Right? Like there's a lot of interlinkages here with obviously Bo Hines, with the Lutnick and Cantor connection. There's just a lot of intermingling here. So this is probably as close as we're going to get to a quote unquote Fed coin. I would imagine is USAT.
Yeah, they can just absorb losses for so long, just given how much gold, land, and Bitcoin they have. I was going to say I could see JP Morgan, all of those guys paying an arm and a leg to try to own a very small percentage of the business, just to, similarly to what we talked about NASDAQ earlier on, trying to understand how the largest player in the space really operates, but I have no idea why Tether would let any of them in. I think they're just going to operate kind of by themselves, how they have over time. And it looks like Anchorage and Cantor are their respective partners for issuance and custody. But yeah, I don't necessarily see them working with the JP Morgans, et cetera, unless they actually provide real value on their side. It will be interesting to see who they partner with and why.
Yeah, I mean, I don't think they would let them partner. I don't think either one would actually want, because to get an inside seat on what Tether's doing, Tether wouldn't want them to see that. Like, I think as big as Tether is, ultimately, the capital flow, specifically US, when you think about the big banks, and this also kind of like sheds light on like Fidelity's big kind of plans, or they've been, rumored to be launching, stablecoin, amount of assets that they custody, that I think that's probably the closest you end up is like some kind of consortium, because of the liquidity profile, and also economies of scale and just like distribution with all these banks, and they have like the underlying banks, right? So like you think about sub custody and then going out to like merchant banks, like that's probably what sparks this deal. And so Tether's just going like, just all in before these guys wake up to it. But you can't imagine. I think one other thing I was going to share is this kind of further shows how they're dead unless they figure something out, because what Tether understands is banking's effectively all digital now. When you think about in cyberspace, you can have, your wallet, multi-institution, your own self-custody, whatever. And then if you need dollars, you can actually have a digital wallet for your USDC or USTA or USAT. And like, how much like banking do you really need in Rails? Do you need for that? And if you're dependent on the exchange, maybe you have to do KYC, but you can effectively do almost everything without the notion of a quote unquote banking license. And so if they don't figure out that like moat with capital, they're going to see more and more capital flee. And then you're going to naturally have native like financial products that are built in that version of it. And it'll take time. But yeah.
Yeah, I'm really bearish on the consortium too, just because it's a startup, and trying to get a bunch of slow moving bureaucratic compliance first banks to try to create new products and services, though they obviously have the distribution that will allow them to get significant benefits, especially out of the gate. But I just don't think that they're going to iterate, meet the customer needs nearly as fast as the company has actually done it before.
Well said. All right, boys. I know we have to wrap. Any final thoughts? Parting words?
Can we just pull up that fragile economy deal thing real quick?
Yeah.
I thought it was interesting.
The Wall Street Journal.
Yeah, I think it'll just pop up the main headline. So America's buy now, pay later economy, signs of emerging debt crisis everywhere from credit cards and mortgages to government budgets. This was written last week, and this kind of like coincided with the revisions to the employment. I think it was like close to 1 million jobs and like 900,000 or whatever. I mainly call this out because, I've found, and I was naive to this, that most people are very underweight Bitcoin, even people listening to this and following along. And definitely if they are, their family is. There's never been a better time to understand just how asymmetric the trade is, right? Like most people think of asymmetric just upside, but it's also protecting your downside. And a lot of individuals naturally hesitate because of the custody situation, making sure nobody, like, again, I always joke, people would rather hold negative yielding bonds and have their, Bitcoin evaporate if they put a large percentage of their wealth in BTC and they don't feel comfortable with self-custody, collaborative custody, third-party custody. So I think it's just an important time to go deep and figure out the why, the value prop, learn more about what we're doing. And it doesn't have to even be with us. I prefer somebody just gets Bitcoin exposure and gets comfortable with custody anyway versus holding bonds or, over inflated equities, because it's just going to get messier from here. People are just getting in and out. You got to see this with this data coming out.
Yep. Very well said. Liam, anything else?
That's it for me.
You sell your bonds, Liam? Let the audience know.
I have no bonds. Bitcoin only.
Do your parents have bonds? Do we have to save them?
Yeah, they don't have enough Bitcoin.
Just send the clip, this last clip for them. Just be like, you guys should listen. Just listen. Read some of the content. Brian produces great content. It helps. Every little share goes a long way. I'm not even talking about us. I'm just thinking about how many touch points. It took me 5 years sitting at the dinner table with my mother-in-law before she just turned into a spike coiner, because I was just like, look, you're retired and it's not going to go far enough. Because you see this, happening with inflation, and she just had to finally, kind of ape in. But the point being is, if you really care,
might make sense to get some.
And if they don't get some, just share the info, just share the data, share the information, share the podcast. It's going to click eventually, and then it's going to change everything for them. So it's important.
Yes,
and just a
share
small
the
amount
pods.
is a good way to track what's going on and feel like they're invested too.
Yep, just get a little starter position and then continue to learn more. But yes, please subscribe, share the pods. Check out our new podcast, Bitcoin for Businesses, released this past Saturday, and subscribe to our research newsletters. And we'll see you guys next week. Thank you.
All right, thanks
guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.